In over 120 countries, there are RSM experts who take time to find out what makes you and your business tick. Wherever you are and wherever you want to go, our audit, tax and consulting services are designed to help you move forward with confidence. It's your ambitions we care about, and like you, our focus is on your future. The advice you receive may come from individual RSM experts, but it will be supported by our collective local and global knowledge, helping you grow and safeguard your future. That's the value of RSM. That's the power of being understood. At RSM, we have over 40,000 great minds that take the time to find out what makes you and your business tick. Our audit, tax and consulting services are designed to help you move forward with confidence, but it's how we do it that sets us apart. RSM's experts take time to understand what matters most to you, which means you receive advice that goes beyond your expectations. What you'll notice is the lengths our people go to understand the hurdles that stand in your way, and then to find innovative ways to help you jump over them. That's the value of RSM. That's the power of being understood. In over 120 countries, there are RSM experts who take time to find out what makes you and your business tick. Wherever you are and wherever you want to go, our audit, tax and consulting services are designed to help you move forward with confidence. It's your ambitions we care about, and like you, our focus is on your future. The advice you receive may come from individual RSM experts, but it will be supported by our collective local and global knowledge, helping you grow and safeguard your future. That's the value of RSM. That's the power of being understood.
Good morning, everyone. Welcome to our today webinar. In this beautiful day, we will present the topic on overview of applicable regulation for KP3A and KPPA representative office. My name is Astrid, and I will be your moderator for the next 2 hours. Before the presentation begins, allow us to introduce you at a glance about RSM. RSM is a powerful network of assurance, tax, and consulting experts with offices all over the world. We have firms in 120 countries that spread in 6 continents. In 2022, we managed to grow the revenue of 15% to be $8 billion. With over 830 offices and 57,000 people over the world, we are here to support and advise you on a wide range of issues where it reflected on our service line growth in consulting, accounting, tax, and audit area. While RSM Indonesia have been serving stakeholders since 1985, currently we have 700 staff, 40 partners, and 2 offices in Jakarta and Surabaya. RSM Indonesia offers world-class services in many areas on audit, tax, and consulting, from the core services such as audit and assurance, outsourcing, tax, to a wide range of specialist services such as IT consulting, advisory, and other consulting. Our brand promises is all about confidence. We put ourselves at the heart of your business where we can be most effective. As your long-term advisor, we gain a deep understanding of every aspect of your business, so we can respond with the right expertise and insight at the right time. Our vision is to be right partner to its stakeholders by rendering professional value-added services to support our clients' target, providing rewarding professional and enjoyable working culture while contributing to the profession industry and to the Indonesian economy. Now, let's move to the core of event. Today's webinar topic is overview of applicable regulation for KP3A and KPPA representative office, which will be presented by Jefri Purba, Oki Suprayogi, and Nick Graham. The first speaker, Jefri Purba, is our manager in business and corporate services, specialized in corporate secretarial services. Over 5 years experience in RSM, Jefri regularly works with foreign investors to facilitate their setup in Indonesia and ongoing compliance. The second speaker, Oki Suprayogi, is our manager in business corporate services. He is responsible for payroll services and its compliance. And last but not least, our third speaker, Nick Graham, is our managing partner in business and corporate services. With more than 29 years of professional experience in Indonesia, Nick is experienced in providing tax advisory and business establishment outsourcing services to foreign companies wishing to establish and run their operation in Indonesia. Our webinar rules today. Participants can submit questions via chat box on screen. Write down your name and organization. Questions are expected to be short, concise, and clear using polite words. Moderator will choose which question to answer. In the end of webinar, we will send a feedback form link through chat box. Webinar slide will be accessible to download after the participant has completed through the feedback form. Without further ado, I would like to welcome the presenter to deliver the presentation. Jefri, the floor is yours.
Thanks, Astrid. Thank you for all participants attending today's webinar. I will begin by presenting the licensing aspects of KP3A and KPPA rep office. A rep office is expected to be instrumental in promoting and providing momentum for continued expansion of the Indonesian market. There are 4 types of rep office licensed through the OSS. The first one, on the left side, is a foreign trade representative office, or usually known as KP3A. The second one on the top side is foreign company rep office, or known as KPPA. The third one on the right side is a public work rep office, known as BUGKA. This is a rep office involved in construction sector. And the last one on the bottom side is the electricity supporting services rep office. The next slide will focus on the KP3A and KPPA. However, it is good if I give general information for the BUGKA. The same as all rep office, a BUGKA is not required to have capital. Unlike other rep office, a BUGKA is permitted to generate income. The BUGKA should enter into a joint operation contract or agreement, and that JO then bids the construction work. I'm not able to comment for the electricity supporting services rep office because we have not assisted the establishment or compliance of this. This slide describes the permitted activities for the KP3A. This slide describes the general information for the KP3A. The KP3A is regulated under Ministry of Trade Regulation number 10 of 2006, which amended by Regulation number 28 of 2010, and amended again by another regulation of 49 of 2020. The regulation of 2020 has now includes trade through electronic system. For example, foreign companies in e-commerce and marketplace should have a registered electronic system, but we do not focus on the trade through electronic system. Under Jokowi regime, the licensing authority has been changed to the OSS, which is managed by BKPM. The recent development for KP3A license is regulated under BKPM Regulation number 4 of 2021, which does not revoke the earlier regulation. The KP3A is suitable for representing a foreign company in Indonesia to monitor distribution of goods and referring sales inquiries to the Home Office. The KP3A is a representative of foreign trading companies who can take the form of selling agent and or manufacturer's agent and or buying agents. Please note that the agents does not refer to the activities that allow the KP3A to generate income, but mostly refer to the activities that help the head office to sell. As you can see from the slide, there are 4 permitted activities. In general, these 4 activities refers to marketing and sourcing. Marketing meaning that promotion and market research, while sourcing meaning assist and purchasing and export. These 4 activities are usually stated in the letter of appointment. This slide describes 4 prohibited activities. The first one is the KP3A is not allowed to perform trading and sales transaction from the initial to the settlement stage. For example, submit proposal or tender, sign contracts, settle claim, issue invoice, etc. It cannot carry on business to derive income, whether in its own right or on behalf of the foreign company represented. Second one is all transaction must be conducted between the head office and its customer or distributor in Indonesia. The third one is KP3A is not eligible to apply for an import license and is not able to carry out import. The import of goods must be conducted by an Indonesian entity which has a valid business license and or import license. There is a way for goods to enter Indonesia by KP3A through temporary import, an import approval for a particular use. For example, goods intended for international expo, seminar, conference, etc. Temporary import is allowed for 1 year and can be extended to a maximum of 3 years. When expired, the KP3A must export the goods back to the origin country. And the last prohibited activity is the KP3A should not perform operational business. There is also another prohibited activity related to the OSS account holder. The OSS prevent registration of a director to be the account holder of KP3A and KPPA, meaning that the OSS prevent a same person to be the account holder of the other rep office and also companies. This slide describes requirements applicable for KP3A. The first requirement is head office should appoint an Indonesian foreigner as a chief rep. Indonesian or a foreigner as a chief rep. The next requirement is the chief rep must have qualification of S1 degree and has experience of 3 years. S1 degree refer to bachelor degree according to Indonesian education system. Later, when you decided to set up a rep office, the OSS will require education certificate of the appointed chief rep. The next requirement is head office can establish a branch office in any location. The opening of a branch office is also related to tax registration, where each of branch office should obtain a tax ID number or NPWP. The next requirement is head office should appoint a local company or distributor to allow import of goods to Indonesia. The next requirement is for each foreigner to be employed, there should be at least 3 Indonesian employees as counterpart to the foreign employee. Meaning that if there are 2 foreigners, then the KP3A should employ at least 6 Indonesian employees. The next requirement is the chief rep, with the approval from head office, can appoint assistants to be located in a branch office. The assistants must have background related to the promotion, market research, and sale and purchase control. The next requirement is head office should ensure the appointment of chief rep is valid. Before the OSS policy, the validity of KP3A license is maximum for 3 years, according to the appointment letter. Under the current policy, the validity of KP3A license is remain valid as long as the KP3A remain in operation. How to prove KP3A is still in operation? The answer is to keep the appointment of chief rep is up to date or not expire. This is why we will send a reminder to renew the appointment letter, which soon be expired as per our record. And the last requirement is KP3A should update the OSS system if there is a data change. For example, change of address, either the head office address or the Indonesian address, or another change related to the chief rep. This slide describes the process to establish KP3A. There are 2 stages to establish KP3A. The first one is preparation and notarization and legalization of documents at the Indonesian embassy. The process overseas involves the compilation of various corporate documents, notarization of the appointment letter, and submission to the trade attaché, and obtaining the reference letter. In many countries, there is also a need for local authentication or similar of the notarized documents before these are submitted to the trade attaché. For example, in Singapore, the notarized document must also be authenticated by Singapore Academy of Law. So, second one involves submission of documents which have been legalized by the Indonesian embassy along with other documents for the chief rep. These must be submitted and uploaded into the OSS system. There is also a requirement for a bank reference letter, a letter that stating company's account has been maintained at the bank since the date when the account was opened and the nature of the banking relation. The renewal appointment letter mostly the same as the establishment process without the process for tax registration and opening account. This slide describes general information of KPPA. The KPPA is regulated under BKPM regulation number 4 of 2021. As you can see from the slide, there are 2 different activities. The first activity is relevant if KPPA will be acting as a supervisor, a license, coordinator, and managing the interests of the company. And the other activity is relevant if KPPA will preparing for the establishment and business development of PMA companies in Indonesia or in other countries in Indonesia. KPPA should select which activity is appropriate for their purposes in Indonesia. You can select both of these 2 activities. This slide describes prohibited activities of KPPA. There are 3 prohibited activities, mostly the same as mentioned in the KP3A before. The first one is KP3A should not generate income from any sources within Indonesia. The second one is KPPA is prohibited to carry out business or enter into agreement or transaction for the sale and purchase of commercial goods or service with companies or individuals in the country. The third one, the chief rep cannot hold concurrent position as a director and or more than 1 foreign company representative in another entity in Indonesia. As I mentioned earlier, before in a previous slide, the USS prevent the same person to be the account holder of other rep office and companies. Some overseas companies set up a KPPA to look for a business opportunities. However, they were actually marketing and maybe providing services from head office. We do not have an experience where BKPM revoke a KPPA license, but best if you avoid the misuse of KPPA. This slide describes 4 requirements that exactly the same as per KP3A. The only difference is related to the branch office. The KPPA can open a branch office if located in provincial capital, unlike KP3A that can open a branch office in any location. The other 2 requirements are the chief rep must reside in Indonesia and therefore should obtain a work permit, be responsible for the smooth running of the office, is not allowed to carry out activities other than the activities of a foreign company representative. And the last one is related to the use of local manpower, slightly different to the KP3A. The KPPA is required to employ 1 Indonesian employee as counterpart for each foreigner to be employed. This slide describes the establishment process for KPPA. This is also the same as mentioned for KP3A. The process overseas involve additional steps after documents are legalized by the Indonesian embassy. The letter of reference is issued by the IIPC. This is a representation of BKPM in overseas countries. There are 8 IIPC office, Abu Dhabi in the Emirates, London in UK, New York in US, Seoul in South Korea, Singapore, Sydney in Australia, Taipei in Taiwan, and Tokyo in Japan. If your country is not located in those 8 countries, the letter of reference is issued by the Indonesian embassy. You might not require consularization if your country is a party of Apostille Convention. The Apostille Conventions facilitates the use of public documents abroad. For example, in the past, documents from Singapore should be processed through 4 different authorities. 1 is notarized by the local notary, 2 authenticated by Singapore Academy of Law, 3 consularized by the Indonesian embassy in Singapore, and then 4 IIPC issued the letter of reference. Now the process does not require consularization by the Indonesian embassy in Singapore. There is also a requirement for bank reference. This is also the same as mentioned before in the previous slide. This slide describes several issues when we open a bank account. The first issue related to wet signatures requirement. Some banks requires notarization and legalization of documents that are signed from overseas. The second issue is some banks might require notarized or certified true copy of passport. And the last one is there might be lots of required document as a part of now your customer KYC. We can only assist to data that are provided to us. Some banks simplify the process if already a customer within the same bank. This slide describes several issues when we arrange the tax registration. The first one is tax registration requires EFIN. EFIN is an electronic filing identification number of the chief rep. Someone who has NPWP must also has EFIN. Tax registration by a non-resident chief rep might be rejected. This is because we have failed to provide individual EFIN of the chief rep who might not yet have a work permit and personal NPWP since the rep office is only just set up. This could delay the process for tax registration, and possibly need to change the chief rep. Lack of AFIN impacts tax reporting, but does not prevent payment of tax. The second one is AFIN will be sent to the registered email of the chief rep. There are several experiences when ITA fail to send AFIN to corporate email. We often suggest client create a Gmail and use this as a registered email for the purposes of AFIN. The third one is the original NPWP card will be sent to the registered office address. If you fail to receive the original because it is a virtual office without mail handling, then documents will return back to the Indonesian tax authority. There are more processes to retrieve the original from the Indonesian tax authority. This could spend lots of valuable times. Moving to the next slide, this is a routine compliance for rep office. There are two compliance. One is related to the semester report, and the other is for related to the manpower report. As you can see, there is a due date to submit the first semester report at the latest 30 June. Sorry, at the latest 10 July, and the second semester report should be submitted at the latest 10 January. And the other compliance is manpower report, which should be submitted at the latest 31 December. And also there is another compliance related to the welfare report. This is required from the Jakarta government authority. This in the past, this is required when we submit the manpower report, but there is a question whether if you need to get a licensing from the Jakarta government, then you need to submit the welfare report. We would like to give a short information of it. In future, you decide to close the rep office. You can see there are 5 steps to close the rep office. The top box represent the process in overseas, while the remaining 4 boxes represent the process in Indonesia. We can attend to both licensing and tax aspect of the close of rep office. This is the end of topic related to the licensing aspect of KPPA and KP3A. As a reminder, please put any question into the chat box. I will now hand over to Oki to present manpower or payroll aspects.
All right, thank you, Jeffrey. So I will start to share for the manpower and payroll matters. Okay. I would like to also remind everyone that if you have any queries, you can put your queries into the chat box, so we can attend after all of the presentation has been presented. Okay, let's start with the first slide related to the manpower and payroll regulatory. This slide is comprises of the governing law related to the manpower and also payroll matters. And then right now, the current governing law is primary is the omnibus law, which is substituted by the Perpu number 2, 2022, which has been approved by the House of Rep by end of the March. And then the other one is the implementing government regulation to the Perpu number 2, which is PP 35, 36, and 37, and also the PP 64, which is related into the health insurance, and then undang-undang or number 24, Social Security Agency law, and then also for Undang-Undang number 40, and then Undang-Undang number 13 for the manpower law. And then we'll start with the hiring side of things from the manpower employment. Yeah, there is two type of the contract type, which is the fixed term employment. We call it as a PKWT or PKWT, and then the second one is the PKWTT for the indefinite terms of employment. Yeah. For the PKWT, for the fixed term employment, the type of the permanent is not intended for the permanent type of work. Yeah. And then the maximum of the PKWT is for the 5 years period, and then no probationary period is applicable for this PKWT contract. And then also on the PKWT shall be registered into the manpower of department within 3 days after the commencement of the contract. And if this Depnaker provided the online system, but however, if there is no online system provided, then it should be registered within 7 days. And then the PKWTT for the indefinite terms of employment, the probation period is allowed only for maximum 3 months. And then this is intended for the permanent type of work. Here is the requirement for the employment contract, which is the employment contract shall be in writing, and then also the default language is Bahasa Indonesia, but bilingual is allowable. And however, Bahasa version prevails if there is any discrepancy. And then the consists of the following information should be declared under the employment contract, which is such as an employer details, and then employee details, and the positions offered, and then salary and wages, and also the payment method, and also the term and condition indicating the rights and obligation of each party. And then also the commencement date and the validity of the agreement, place and date of the agreement, and the signature of both parties. We are this slide. We are talking about the salary and wages. Yeah. So, the employment contract so also refers the salary and wages, but however, the salary wages also has been governed by the government regulation. Yeah. And then the minimum salary for the salary and wages should be prescribed. Should be refers to the minimum standard prescribed by the provincial government called UMP, and this UMP is set each year, but each year by the government. And right now for the Jakarta area for 2023 is for about the minimum salary of IDR 4.9 million. And then during salary negotiation, it should be also clearly declare whether this is on a gross basis or net basis, which is gross is all mandatory deductions should be deducted from the employee, or net, where all this or all sum of mandatory deduction should be borne by the employer. And then this table is referring regarding the gross method and net method difference. Yeah. So this is related to the how the income tax, whether this is being deductible expense or not, and how is the tax recorded for the bookkeeping purposes in relation to the employment agreement. Yeah. If it is intended for gross, then the agreement should clearly mention as a gross, and income tax and other deduction should be deducted from the employee. So maybe you can refer it after this session for detail. And then the other thing that's need to concern also regarding the manpower employment, there is also mandatory social security. We call it the BPJS program. In terms of the social security related with the hiring, there are two mandatory programs, which is we call it as a BPJS Ketenagakerjaan or BPJS TK. This is related to the employment, and then BPJS KS related into the health insurance. Yeah. Please note that the employer should be registered for these two kind of mandatory social security after the employee officially registered for their rep office license and tax ID registration. And then next slide is the table of the program from the BPJS-TK. From this that we can see that who is the contributor, whether employer and employee, and then what is the component of the BPJS-TK, which is usually comprises JHT or age saving or accident at work, which is JKK, and then death funeral. So we can see that there is some contributor for the employer and the employee. So I mean, it will be impacted into the calculation of the income tax as well. And please note that for the GKK, accident at work, usually for the rep office, it will be assessed by the BPJS TK office with the 0.24%. But however, this should be assessed by the BPJS based on depending on the risk or the profile of the employer, as should be determined by the BPJS TK office. And the next one is the jaminan pension, which is still part of the BPJS TK employment. So this is the contribution for the employer is 2%, and the employee 1%. Total is 3%. But however, for this JP is subject to a ceiling announced annually, usually during January and February, and will effectively by the early March. Yeah. And then for the other BPJS TK program is the new one. This is unemployment insurance. Please note that this new program is not creating any additional contribution both from the employer and the employee. And then the ceiling for the salary and fixed allowance for the contribution is 5 million. But however, again, please note that there will be no additional contribution from the employer and employee. So although the part of the contribution is taken from the JKK and JKM contribution, and also will be partly funded by the government as well. So there is no additional contribution. And then the second BPJS program is the BPJS Health, which is for BPJS Kesehatan. And this is the table of the contribution both for employer and employee, 4% and 1%, and total is 5%. And then the ceiling for this contribution is based on the maximum 12 million monthly salary. But however, if the salary below the 12 million, we need to refer whether which one is the actual higher salary or the UMP or province original minimum salary rate announced by the government. And then the next one, we need to also concern that related to the regulation right now is the working hours. There is two types of working hours during a week, which is 7 hours per day, but maximum for 40 hours. Refers for the 6 working days, and the other one is 8 hours for 5 working days. But usually, mostly of the employer now is applied for 8 hours per day, which is 5 days a week. And then for the other matters regarding the hiring is the overtime. Yeah, I mean, sometimes the employee is also required to do the overtime work. So, I mean, please note that the overtime is only entitled for a position that is not a thinker or a decision maker position. Overtime hours shall be a maximum 4 hours per day and 18 hours per week. Overtime is also subject to the consent, to the prior consent from the employee. So both parties should be agreed before the overtime. And then employee is entitled to an overtime payment if worked during their weekly time off and also national public holidays. Yeah. And then we need to also determine how much is the hourly overtime, which is determined by per 173 times monthly salary. And this is the table of the overtime rate used to convert actual hours of overtime performed during the weekdays and also the weekend or public holidays into the overtime payment payable due by the employer. So we provide with the two table. The first one for overtime done during the weekdays. And this slide is represent the overtime done during the weekend and or public holiday. And then regarding the hiring, we need to also because these employers should pay annually for the religious festive allowance, which is called THR, yeah. Which is, I think this month has been such a trending topic for I think for everyone, because we are going to have Idul Fitri soon in the next 2 weeks. For the THR is payable to employees that have worked for at least 1 month or more. Yeah. And then the THR should be paid within by the latest 7 days before the D-Day. And then the minimum amount of THR is 1 month salary for work for employees who work for employer for 12 consecutive months, and the prorate will be calculated for those who have worked but minimum for 1 month but less than 12 months. And then the basis for the calculation of the THR is basic salary plus any fixed allowance. Please also note that the THR is not the 13 months bonus, yeah, which is employee would regard as a payment in addition to HR. And then the things that we need to also attend that employees deserve to also have a leave. Yeah, we divided the leave into the three main leaves, which is annual leave, long service leave, and paid leave. Yeah. Annual leave is a mandatory annual leave, and then normally someone who have worked for 12 consecutive months will be we have entitled to have 12 days annual leave. Yeah. And then the second one is the long service leave. However, the long service leave can be provided mutual agreements stipulated on the employment agreement. And then for those who already provide long service previously, shall continue their long service leave provision policy and entitlement. And then there is no obligation to provide long service leave by the employer if not already in place previously. And then the third one is paid leave. Paid leave is we divide again into the allowed paid leave and the paid national public holidays. And this is the table or or the type of the allowed paid leave and the paid national holidays. During this leave, employee is not allowed to deduct any as employee salary. Yeah. So because this is as allowed paid leave. So if this is the also example of the allowed paid leave, which is sick leave, maternity leave, and then paternity, marriage, and others for the bereavement, and then also period leave for the women, and then paid national public holidays. Usually, if we see that usually in total 14 national public holidays during a year, which will be announced usually in the beginning of the year. And also there is some national collective leave announced annually by government. And then the next manpower employment matter is related to the termination. We need to make sure that employment agreement clearly covers term and condition that the employment can be terminated based on the clause agreed on the agreement. Basically, employer and an employee shall avoid the termination, but however, if this cannot be avoided, then the process will be take as follows. And then for the termination, probably the first step is employer to advise a termination purpose and reason to the employee and or a labor union. If there's agree, then the next step is a report to the attacker, and also if there is not agreed by the employee and the labor, then we can have escalate this into the manpower of department for the three-party mediation and resolution. But if there is no agreement achieved, then we can also escalate into the industrial court resolution. And then regarding the termination, it will be also involving for the termination payment. For the termination payment of for the permanent employment contract, there will be a severance pay plus the service pay and the compensation pay. And then the severance pay, this table representing the severance pay, which is based on their length of the service of the employee. And then the severance pay will also be multiplied by multiplier factor, which is depend on the nature of the reason of determination. The severance pay could be multiplied by a factor of 0.5 or 7.75 or 1.75 or even two times severance pay due based on the manpower law. So there is some, I think we have some 4 multiplier factor for your reference. We are not going to discuss it any further because it's so many. Then we move into the another termination package, which is service pay, which it is also based on the based on the length of service, and there is no multiplier, just like the severance pay. And the third one is the compensation pay. There will be 3 components of this. And then the next one, the alternate option for the PKWT determination, which is termination due to poor performance. However, this should be applied within the following term, which is first one is in the agreed employment agreement, there is some clause declared regarding determination due to performance issue, and then the employee must have received 3 warning letters, which is each of which is valid for 6 months. And then after that, the employer need to notify for the termination into the Depnaker. And then the second one is termination with the condition of negotiated resignation. And the condition applies if there is no provision in the employment agreement to allow termination due to poor performance. And then the warning process was not in accordance with those provisions. Employee did not breach any relevant provision, or the employer doesn't wish to report for the Depnaker. By regulation, an employee is only entitled to minimum compensation if they resign. It's only having compensation pay. But however, assuming it is a negotiated resignation, then this is the decision of the both party on the amount to be paid for the resignation. And then also the termination also govern also for the termination pay for the PKWT, which is in the term of compensation pay and determined by the length of service performed. And then here is the table showing the determination of the PKWT compensation pay, which is based on the length of the services. Maybe you can refer this after I see in details of the provided slides after this session. And then we move to the next material, which is related to the payroll. Things to also attend is the individual tax resident. All employees should have a personal tax ID number, which is NPWP. And if employee cannot provide the NPWP, then the income tax calculated will be 20% higher than the standard rate. By 1 January 2024, all individual taxpayer will need to use their 16-digit NIK synchronized NPWT. NIK is a citizen ID because right now we are tax residents should synchronize their NIK to be NPWP from the 15-digit into 16-digit. And then for the income tax statutory reduction, there is also we need to consider that there is statutory deduction, which is biaya jabatan, and also PTKP, non-taxable income, which is determined by the marital status and the dependents, and also BPJSTK contribution. And then we need to also attend into the benefits in kind. If employer provide provision of goods other than the money, we call it an natura, and then provision of the benefit in the form of facilities. So this table is representing the example of the natura and then kenikmatan. And then during the obligation to withhold Article 21 income tax for BIK only come into effect for BIK received or obtained commencing 1 January 2023. Therefore, BIK received in 2002 and not yet subject to Article 21 withholding tax must be self-assessed and reported through employee annual income tax return for the last 2022. And then we need to also attend that the progressive tax rate for the income tax. So this table is the progressive tax rate based on the taxable income range. May vary from 5 to 35%. Please note that it will be a tax based on the taxable income range. And then the other one is the compliance related to the payroll. So the compliance for the income tax Article 21 for the payment, it will be due by 10th of the following month and the reporting on 20th. of the following month, and then BPJS-TK, it will be due for payment and reporting by 15 of the following month, and then BPJS-KS is the 10 of the following month. So I think from the manpower and payroll side, and please, if you have any queries, please put on the Q&A chat box, and then the next presentation regarding to the taxation will be presented by Nick Graham. Nick, please continue for this one. Thank you, Pak.
Great. Thanks very much, everyone. I appreciate your time.
Pak Nick still mute, Pak.
Sorry, obvious technical problem then. Let's start again without using mute. Thanks everyone for your time, for joining us this morning and working through with us on regulations that affect KPPA and KP3A rep offices. So this final segment of this, the webinar looks at taxation of the two types of representative officers. And again, just a reminder for those that aren't doing it, if you do have any questions, please feel free to ask the questions through the chat box. We are going to try to have about 20 minutes available at the end to go through questions. It may cover everything, we hope it does, but if it doesn't, you can always make contact with us later. So of course, when looking at taxation, you need to start with the question of what is a rep office from the perspective of Indonesia's tax. If you don't start with that, it's difficult to understand what goes on from there. So in accordance with the Indonesian tax law, as most recently amended by the Purba, which has now become a law, a rep office is a permanent establishment. Now, keep in mind, this is under Indonesian tax law. We're not worrying about tax treaties at the moment. We're just talking about the domestic position. So a rep office is a permanent establishment. Permanent establishments are tax subjects. And PEs, so therefore rep offices, are treated the same as a corporate entity, or as it's described in the tax law, a badan for taxation purposes. And so what that means then is that rep offices need to comply with all applicable tax laws and regulations. If you like, the perspective we take on this is a rep office is a PE and at a minimum has administrative obligations for tax. And what I mean by administrative, that's not a legal term, it's our term. What I mean by administrative is that it needs to attend to certain things, withholding tax and reporting of withholding tax and corporate income tax returns. A rep office at worst then might go from administrative to, we'll call it full PE status, meaning it's got corporate income tax obligations as well. And we'll get into that in some later slides. So in terms of the key tax obligations, if you've already got a rep office, you would be aware of at least two of these. You may not be aware of the third. So those obligations are for withholding tax, which is monthly, offshore VAT, and corporate income tax. And I'll now go into a bit more detail for each of those, although the key focus of this will be the corporate income tax, because that tends to be the hotter topic. So in terms of withholding tax, again, assuming you've got a rep office here and you've been running it for some time, you'd be fully aware of these basic obligations. For those of you who are looking at setting up in Indonesia, Article 21 tax refers to the tax that needs to be withheld from salaries to employees, as Oki was talking about earlier, but it also covers withholdings against individuals providing services, individual consultants. Could be an actual technical consultant, it could be an individual lawyer, it could be an individual notary. All of those are covered by Article 21. The progressive rates that Oki mentioned cover employees, and there are other specific rates that cover individuals. Article 23 is general withholding tax for payments to domestic service providers. So providers of services, professional services, for royalties, for interest, and for rentals of non-land and building. So, for example, car rental, photocopier rental, or computer rental, things such as that. And the general rate of withholding tax on Article 23 is 2%, but for royalties, interest, and some other areas, there are some different rates, but most things are subject to a 2% withhold under Article 23. Then we have final tax, or as it's technically called, Article 4 tax under Article 4.2 of the income tax law. And in particular, these relate to land and building rental, office rent, which is at 10%, and for example, construction services, where the rate depends on the nature of the construction service. Is it related to design, or is it related to actual construction or fit out? And the reason we've mentioned this one, of course, is that if you're setting up a new rep office, you might be having a fit out. Well, that potentially is going to get caught under Article 4.2. And finally, Article 26. Article 26 is again withholding tax, but it's withholding tax where there is a payment or an amount due to a non-resident, again, for services, for fees, royalties, interest. It is also for dividends, but that's not relevant for rep offices because rep offices shouldn't be paying dividends or can't because there should be no profit. And so as you may or may not know for Article 26, the base rate is 20% under domestic tax law, depending on the nature of the tax object. That could reduce could be 0, depending on it's for services, or it could drop down to 10 or 15%, or even as low as 5%, depending on the particular tax treaty. All of the withholding taxes need to be paid to kas negara, or the withholding tax obligation arises the sooner of when you pay the amount, when it's due, or when it's provided to be paid. Now, provided to be paid technically doesn't mean accrued. It's the example given in the tax regulations refers to a dividend when a dividend is declared. But the key point is certainly if you have paid the amount, it's definitely due. If you book it through your accounts, so sort of an intercompany journal, it's due. And therefore there needs to be a withholding. That tax needs to be paid by the 10th of the next month and then reported by the 20th of that next month. I've got a third point here, which I just want to raise for people in case they're not aware, which is that a rep office is a division of the parent or the head office, we call it, the head office company or the sponsor entity. Now, if the head office pays a cost for the rep office on behalf of the rep office, for example, because the rep office doesn't have a bank account, or maybe the bank account's only been used for salaries alone, and the head office pays, say, the office rent on behalf of that rep office, that office rent should be recognized through the books of the rep office, even though it didn't make the transfer itself, and the withholding tax should be dealt with through the rep office. And so you need to make sure that is dealt with, because if you have a tax audit, there's a reasonable chance the tax auditor will be looking for something like office rent. They may not be looking for payments for professional services, but they would be looking for office rent because the assumption is everyone's got an office somewhere, even a virtual office, but they've got an office somewhere. So you do need to be aware withholding tax doesn't just apply based on what the rep office itself pays, can apply to what the head office pays, particularly if it's something clearly related to the rep office. So please do keep that in mind. Now, at this point, you may be wondering about Article 15 tax. You may be aware of this tax on deemed income. Now, that's not a withholding tax, and so I'm not talking about that now. I have parked that under our discussion on corporate income tax. So it is coming, if you were wondering about that. The second potential monthly tax obligation is what we call offshore VAT, or technically is known as PPN, Jasakana Pajak Luar Negeri, or, well, that's overseas services provided, but it also covers intangible goods. Now, this is self-assessed, and so the rep office needs to pay offshore VAT if it uses in Indonesia services or intangible goods from overseas. Actually, just for reference, even if you're not a rep office, this applies as a company if you use services or intangibles from overseas. And frankly, all of us as individual taxpayers are also technically obliged to self-assess offshore VAT if we consume some service from overseas. So, for example, you make use of Netflix, you have a gaming account through, overseas, you download some software from overseas. Technically, all of those are subject to offshore VAT. But as you would probably know, most people aren't aware of that, and certainly no one does it. And that's one reason why a couple of years ago, the government issued its regulation on PMSE, or e-commerce VAT collectors, because the government recognized it had two options regarding offshore VAT. Well, three options. One is it could just only focus on businesses, where it could easily, audit a business and see if it's dealt with it. Second option was to just give up, or the third option was to hit the foreign parties. And so that's what the PMSE regulation does. It identifies, I guess, higher value foreign e-commerce businesses that are dealing with Indonesia. It appoints them as a VAT collector, and then that foreign business charges VAT on its invoice. So for example, right now, I think there's about 146 foreign e-commerce businesses that have been appointed. Netflix is appointed, Facebook's appointed, Google, I think ByteDance is in there, and a whole bunch of gaming companies are in there. Blizzard Entertainment's in there. And all of these ones, if you now subscribe for a service from them, you will see that you are paying, well, you should see that you're paying 11% VAT. That PMSE then pays that to the government. So it's solved, if you like, elegantly and efficiently, that problem of how to collect this money. Anyway, coming back to our rep offices. So if you do consume a service from overseas, then you should self-assess VAT at 11%. That then gets paid the following month. Now, what's important about the offshore VAT for a rep office compared to your typical company is that the rep office is not registered for VAT. It's not a PKP. It's not a vatable entrepreneur. And what that means is that the 11% VAT becomes a cost. So if you do use a service from overseas, it effectively costs you 11% more. And that's before even considering tax treaty issues, where, could you get a tax certificate of residence from the foreign service provider? Did you get a DGT form? Because if you don't, then of course you've got to add on withholding tax as well. And it's for this reason that we would always say to our clients, if the head office for some reason, if the rep office for some reason does need support from overseas, it's smarter to just keep that cost in the head office. Because if you've got, let's say, for some reason you wanted to find your chief rep or maybe an assistant rep for the rep office, and the group has an engagement overseas with a headhunter. So the headhunter finds the person, the headhunter then issues an invoice. We would say that invoice, just issue that invoice to the head office. Don't issue it to the rep office. Because if you issue it to the rep office, then you've got to deal with the PP and lieu and agree, you've got to deal with withholding tax, and you've just increased your costs. Whereas if the head office paid those, it would be okay. Moving on then, corporate income tax obligations. And so these are broken into three parts: corporate income tax reporting, corporate income tax liability, and Article 15. Now, arguably Article 15 is corporate income tax, but it's just dealt with slightly differently. So I'm discussing it as a separate item. So in terms of the corporate income tax reporting obligation, if you've been around for a while and your rep office been established for more than the last 2 or 3 years, of course, you would be aware that there has been no requirement, no request, I should say, no request to report a corporate income tax return. That's the historic position. And it was reflected in the SKT, or the tax registration certificate, that each rep office got. And I'm not sure how well you can see this, but you'll certainly be able to see it on your slide deck when you get that, if you fill out the survey. But if you look down the bottom here, you will see 2 areas for PPH Pasal 25, and PPH Pasal 29, corporate income tax. And those, back in the old days, if you like, were not selected. So it meant that there was no expectation for a rep office, for a KPPA or KP3A rep office, to lodge a corporate income tax return. And we didn't prepare them, clients didn't lodge them, tax office didn't have a problem. That's changed. It's changed because the reason the tax office did not require them in the past appears to have been a policy decision. If you remember from the very first slide I showed, a rep office is a PE. PE is a tax subject, and a PE should be treated the same as a corporate entity, a badan. Therefore, ever since about at least 2000, technically a rep office should have been lodging a corporate income tax return. But for whatever reason, the tax office did not require that. And for many, many years, rep offices were policed for tax through Badora, which is, for example, this SKT is from Badora. Badora was the tax office that dealt with foreign individuals and foreign organizations like PEs, like rep offices. And for whatever reason, they decided there was no need to lodge the corporate income tax return because there was nothing to report. Who cares? Maybe they made it administratively easier. Anyway, as you would also know, in the last, must be 6 years or so, 7 years, the registrations have been spread out now. So if your rep office is set up in Setiabudi, you will be registered at the local tax office. You will no longer be registered in Badora. If you're in Bali, you'll be in, Bali, for example. And so that started to change things, and different tax offices started to treat this position differently. And now we're seeing consistently, in fact, the tax office has taken the view that they will just implement the tax law as written. So they have turned off their policy of not requiring a corporate income tax return for rep offices. And this is now evidenced in several ways. First of all, the SKT that gets issued, the tax registration certificate, will be something simple like this. It will just have your name and it will say you're a badan and you're required to comply with all applicable regulations. Or you'll get that old style SKT, but Article 25, 29 will now be selected. So office's position. And this is evidenced in the fact that now taxpayers are receiving letters reminding them your SPT Badan is due. And remember, it's due by the end of the 4th month after year end. So by 30 April, for example, if you have a December year end. If you don't lodge your corporate income tax return on time, there's a penalty, a one-time penalty of 1 million rupiah if it's late. And of course, as I said, we're getting these reminders and even warnings after the return is not lodged. And then related to that, if you don't lodge 2 consecutive years corporate income tax returns, then this thing called the KSWP, KSWP, taxpayer compliance status, becomes non-valid or not valid. And the implication of, there are some implications of that. First of all, originally, it meant that you could not lodge the semester report for the rep office. As Jefri talked about in the licensing segment, every 6 months, a rep office is supposed to lodge a semester report. And there was a period last year where you weren't able to lodge that if you had an invalid or not valid KSWP. That seems to have gone away now. Not sure why. Maybe they decided that was too much of a imposition on taxpayers. But the other area where it definitely impacts is if you want to close your rep office at present, you cannot process your request to close through the OSS if your KSWP is not valid. So you're required to become up to date, lodge at least your last 2 years corporate income tax returns before you can request the revocation of your licenses through the OSS. And so that's the main issue at the moment, I guess. So you could say, well, if we're not planning to close our rep office, who cares? And possibly that's the correct position, apart from the fact that maybe you have a 1 million rupiah per year fine, maybe no big deal. However, we don't know if the invalid KSWP might at some point impact on the individual who is the representative, because the individual who's the representative has the obligation to ensure the rep office complies with all applicable laws and regulations. They're like a director, basically. Well, from a tax perspective, they are the same as a director. They are the pengurus. They are the management of the rep office. And we don't know if an invalid KSWP for the rep office might some way impact on the individual. You know, whether it becomes something that impacts on their personal tax reporting. So it's something to be aware of. I mean, we take the view, if our clients want to be compliant, then we would say you need to lodge a corporate income tax return each year. And certainly if you're about to close, you're going to have to. Now, in terms of the actual corporate income tax return itself, of course, well, what's going to go in that? And we'll talk about corporate income tax shortly. But of course, if the rep office does not generate income, is not deemed to generate income, then the corporate income tax return is mostly a report. And it's a report of expenses because that's what the rep office incurs. So it needs to report expenses. It needs to still have a balance sheet because that's a requirement. You need to put the financial statements into the corporate income tax return. So you'll have a balance sheet in case there's any assets. You'll have it's a P&L, but it's really an expense statement. And then if you have been paying Article 15, you report that in there. And then you need to think about some other things as well. But it's quite a relatively simple return. And that's why, compared to the complexity of a corporate income tax return for a company, it's quite a different scope of work. So then moving on to the corporate income tax liability. Now, the key point here with corporate income tax is that Indonesia's perspective seems to be slightly different to, we'll call it the international community. Indonesia at minimum says a rep office has administrative obligations, withholdings, corporate income tax return. In addition to that, it could potentially have corporate income tax unless it's protected by a tax treaty. Most tax treaties would state that a PE does not exist, which means from an Indonesia perspective, no corporate income tax exposure, not no corporate income tax return. A PE does not exist if that rep office exists solely for the purpose of purchasing goods or merchandise or for collecting information for the enterprise, or if it's solely for the purpose of advertising, for supply of information, or similar activities which are of a preparatory or auxiliary character for the enterprise. That's what most tax treaties would say. Some tax treaties will also have additional words talking about it can be a combination of these activities. And there are some other conditions, but they're not generally relevant for rep offices. So I haven't bothered to list those about storage of materials, a stockpiling for sending to say a contract manufacturer. They're just not relevant for a rep office. But you do need to be aware of what's in the treaty. If, assuming your rep office is part of an organization, a company that's in a treaty country, because all treaties are slightly different. And you can't just look at this and say, that's, I'm safe because that's what's in this slide. You have to look at your treaty. And it is important to keep in mind the words I've underlined, solely for the enterprise and preparatory and auxiliary nature, because that's going to be relevant in the next slide. So where a treaty will not assist, and therefore where a corporate income tax exposure could exist, is if the rep office exceeds the permitted activities. Now, first of all, keep in mind a KP3A rep office should be doing marketing or sourcing or working with distributors, things like that. So it's quite limited. A KPPA rep office should kind of be doing only looking for business opportunities or looking for acquisitions for the parent company or looking for, the place to set up a PMA company. That's it. So if a rep office is actually effectively doing selling, either literally selling or it's preparing proposals, it's submitting proposals, it's negotiating the price, and it's doing everything other than importing goods and selling it, then that exceeds the activities. If the rep office is providing services, whether it's either through the KP3A or the KPPA, that's exceeding the activities. Or it exceeds what was protected by the tax treaty. And let me just go back again quickly to remind you what's in the tax treaty. So I'm just going to put on a pointer here. So we're talking about solely and for the enterprise. So if we come back here, if the rep office is actually marketing products of other entities, not just for the enterprise, or if the rep office is assisting purchasing or sourcing for other entities, not just the enterprise, not just the head office, then that is no longer covered by tax treaty. The tax treaty only gives protection if you're doing work for your head office. Because the logic is, and this is part of the OECD commentary, because the logic is, if the rep office, if the head office actually is acting as the group sourcing entity for the business, and it goes out and finds products and then various group entities place orders, then that means that group sourcing entity is probably earning a fee for doing that work. And the rep office is part of generating that fee for the head office. That's not, so that means it's doing business. It may not be billing itself, but it's business. And so therefore that should be reported as income. Similarly, if the rep office is marketing for the group, and the group has different entities providing, manufacturing and selling different products, and all of those are coming to Indonesia, well, potentially, again, that's a service. That marketing entity is probably the group level charging a service fee to the different factories or an agent's commission or something for building the market in Indonesia for them. And again, that should be taxable income. So you need to keep this in mind, is the treaties don't protect rep officers in probably almost all cases if they're doing work for anyone except their parent. That's it. And by parent meaning that the parent is the one that then has the transactions with Indonesia. So assuming we have a corporate income tax, we have income, I should say, then how do we calculate the tax? Well, first of all, there's the question of what's the income? And there's three parts to the income, all covered by Article 5(1) of the income tax law. The first is from activities of that rep office and its assets, any assets it controls. That's the obvious one. The second one is income from the head office derived from Indonesia of the same type as that earned by the rep office. So two things to note here. It's from Indonesia and of the same type. So what that means is that if the rep office is considered a PE at generating taxable income, that doesn't mean worldwide income of the head office gets sucked into Indonesia and tax. Only the income from Indonesia. So I guess that's a good point. It's a limited exposure, assuming the head office does business elsewhere. And the second point is it needs to be of the same type as earned by the rep office. So for example, if the rep office was actually providing consulting services, well, strictly it shouldn't because that's not allowed in the license, but it was, and the head office is also providing services into Indonesia, those consulting services should be reported through that rep office. The third category is a bit more technical, which is saying if the head office earns income subject to Article 26 withholding tax that is effectively connected to the rep office, then that will also should be taxed in Indonesia. The example given in the tax law is where head office has a royalty licensing arrangement with an Indonesian company, and it's a PE they talk about. The PE is providing a service to that licensee to help them use the license. That's effectively connected, and therefore the royalty income should also be taxed in Indonesia. We don't really see that one come up very much. So that's your income. Then you look at your deductible expenses. And the deductible expenses are your classic figure M, meaning cost to gain, maintain, collect income, plus an allocation of head office costs related to the rep office. That's covered by director tax regulation. And it's not quite as simple as costs related to. They typically require a proportionate allocation based on revenue and an audited allocation that you have to go into the detail. However, costs that cannot be deducted, if they exist, are head office charges for services, interest, royalties, and similar. And the reason those are not deductible is the perspective is, remember, head office and rep office are one. The rep office is a division of the head office. So they're saying, how can you charge yourself? It's one body. You can't charge yourself one pocket, the other pocket. So those would not be deductible if there were charges. So you end up with your taxable income, less your deductible expenses, creates your taxable profit, or net income if you look at it from an Indonesia perspective. That's taxed at 22%. Unlike companies, you cannot make use of Article 31E, which has that sliding scale of 11% to 22%. And you also can't use PP23, the final tax that applies for new companies with revenue less than 4.8 billion. And then the after-tax taxable profit is taxed or is subject to branch profit tax, or Some people colloquially call it deemed dividend tax. That's at 20%. That 20% can reduce under tax treaty. So that's the picture for normal income that we're talking about. Now, where it gets interesting, however, is if we're talking about deemed income. And so this is the situation that will apply for any income other than potential deemed income for trading rep office, which is covered by Article 15, which is what we're about to come up with now. So, and these are, by the way, the final two slides, just so you know where we're going. So Article 15, tax on deemed income, was created, or it's been regulated for a long time, 1994, and then some additional implementing regulations in 2001 and 2008. And where it's come from is that the government and the tax office, I guess, have recognized it can be difficult to work out the revenue or the profit if a rep office is in fact highly involved in the selling activities of its parent, of its head office. And so instead of trying to, or ending up with arguments about what's the cost and what's the profit and having to do transfer pricing and all this, the government back in 1994 issued a Ministry of Finance decree, which says that we shall tax the net income, and the net income is governed by a norm. Article 15 is about norm, so it's stating a tax on a deemed income. And the norm is that what they call a trading rep office, it generates income, net income of 1% of the CIF cost insurance freight of imports into Indonesia. The tax on that, which is only actually explained later in the SE, the tax on that is 30%. So therefore, we end up with 0.3% of CIF being the income tax. Then, because it's a PE, there's the branch profit tax, 20% of the after-tax profit. So, coming back to that calculation, we end up with 20% times 70% after tax, which is 0.14. And thus, our total tax is 0.44% times the CIF value. If there is a treaty, that can be reduced. For example, if the treaty rate was 10%, then instead of having 20 here, you'd have 10. So you'd have 10% times 0.7 times 70 or 0.7. So you'd have a total tax of 0.37. The Article 15 is due monthly based on previous month's import, which means if there were no imports from the head office to distributors or to customers, there's no Article 15 for that month. It needs to be paid by the 15th of the next month and reported by the 20th. Now, what's interesting about Article 15, and maybe frustrating for some people, is that that rate that is used, the 30%, is the old corporate income tax rate. It's, as you will well know, the rate has gone from 30 down to 28, to 25, and now it's at 22. But the KMK 634 has hardwired 30% in there. It doesn't say this is the ruling rate per the income tax law for Badan. So at the moment, we're still sitting, you could say, at a higher rate than would otherwise apply. Whether this will ever change, we don't know, but that's just an interesting point. The other point, which is perhaps the more controversial one, is that although the DGT says you can use a tax treaty to reduce the rate of branch profit tax, it basically seems to ignore that a treaty could in fact say there is no income to tax. And so we're really not sure if that's their true view, or whether what they're saying is, well, maybe there are some rep offices that aren't subject to tax, but if they are doing too much, then this regulation applies. And that's where at the moment there's, you know, some of our clients say, look, all my rep office does is marketing. That's it. And it has distributors. That's all we do. You know, we don't go and negotiate contracts. We don't give pricing. You know, we're not integrally involved in the sales process. We are a real true rep office, you know, and on art. And so in those cases, they are entitled, if they've got the tax treaty there, to say, well, we're not subject to this. But there's a lot of other rep offices where probably they know their people are involved in, they're not doing selling, of course, because they don't have the goods, but they're doing a lot more than just marketing. And so those ones, increasingly now, clients are saying, we'll accept the Article 15. Because if you don't accept the Article 15 tax, then you need to be aware that at some point in the future, the tax office will start chasing. And of course, probably if you close your rep office, then you'll have a tax audit, as has been mentioned by Jefri. If you want to revoke your MPWP, you have a tax audit. And when you face the tax audit, you can be guaranteed this issue will pop up again because the tax office know their regulation. And then, of course, they will basically say, well, if you don't declare Article 15 and self-assess, and it could be up to 5 years, then we're just not going to revoke your tax ID number. Or alternately, they'll assess you for all of that because they've got the records from customs on what's been imported. And then you'll have to go and object and appeal. So you can end up with a situation that even if you say no, 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 ultimately at the end, you'll get forced to deal with it if you're closing your rep office. And if you're not closing it, of course, remember that 5-year tail keeps running forever. So it is worth looking at it from a cost benefit perspective. Do you argue or do you pay it? And if you do pay it, in quite a few countries, that Article 15 tax, because it's income tax, should be a tax credit in that foreign country. And so it's just a question of where do you pay it? So it's something just to be aware of. It may not be such a big problem after all. So, but if you do want to argue, or you're thinking, oh, this is not fair, then I'd ask you just to consider some things. What are the job positions, job titles of your staff? Do any of them talk about, you know, sales engineers, sales representatives? What are their job descriptions? Are they supposed to go out and sell to close deals? What are their activities? Do you use distributors, which is good? Do staff receive sales bonuses? Because if all those things are there, then if you ever want to argue that you aren't doing selling, you'll be in a very weak position because your facts don't support you're only doing marketing. So with that, we're now wrapping up the presentation. I hope this, particularly on the tax side, it's given you some understanding. There was a lot to cover, and of course, we've only had a short amount of time. I hope what's been explained by Jefri and Oki has also been of use. And what I'd now like to do is to turn the screen back to Astrid as moderator to work through any questions that people have asked. Thank you.
Thank you, Pak Nick, for the presentation. So the next one is we will go through the Q&A session. The first query is from Ms. Amalia from Infocar. Please advise how to apply temporary import. Maybe Jefri can answer it, please.
Okay. Thank you, Bu Amalia, for the question. Actually, the application must be submitted to Directorate General Custom and Excise. So mostly the required documents are related to the plan of the estimate of goods to be arrived in Indonesia, and also the purposes of that goods to be, for example, where the event will be held, and also what event is related to the goods. For further details, I think you can have a consultation with the Directorate General of Custom at Jalan Jenderal Ahmad Yani. If you can look at the map.
Thank you, Jeffrey. The next question is from Eve, from of Singapore Management University. What is operational business? Does it exclude financial and HR reporting or even management? To Jeffrey.
Okay, this is related if operational business, meaning that activities with the purpose to generate revenue. The financial and HR reporting is considered as running the Indonesian rep office. These are not considered as operational business. For even event management, if it is related to arrange to be participant of an event, then this is okay. That activity can be considered as marketing and promotion. If the event management related to running an event, then I'm quite sure this is not allowed because running an event should be done by a PT company. Thank you.
And sorry, I might just jump in there and remind people that what's permitted on licensing can be different to what you do. And that's where the tax comes in. If you actually, as Jeffrey said, if you decided to run an event and maybe your head office books the income, well, then that should be income of the rep office. You breach your license, which in theory, if someone complained to the authority, could result in the loss of that license. But perhaps more importantly is you've actually opened up a tax obligation, a corporate income tax obligation.
Thank you, Pak Nif. The next question is from Pak Purnomo of BBVA. How do you classify rep office of foreign banks? None of the regulation mentioned in the presentation are in accordance with regulation stipulated by OJK. Maybe.
Okay, I think I'll answer the question from Pak Purnomo. Yeah, rep office of foreign bank is very different, because banking is considered as highly regulated sector. I am very sorry that our webinar is focused for KP3 and KPPA. Maybe we can address you to a private email. Thank you.
Thank you, Jeffrey. The next question is from Amanda of Pearson. When we mention the employment contract needs to be in writing, does it mean that e-signature is also acceptable? Maybe okay, can.
Okay, thank you. I think it's from Amanda. Yeah. So I mean, the e-signature is actually can be accepted as long as this has been agreed by both party. Yeah. I mean, it is signed by e-sign from the both side of the party, and then it's been agreed. So I think this is still acceptable. Thank you.
Thanks, okay. The next question is from Ifloh, and yeah, I think this is the same question from Donna. What about the public holidays announced by the SKB from 19 until 20 April and 24 until 25 April? Do this fall under national collective leave, or in other words, will it affect the annual leave for the employee?
Yeah, I think answer this. Yeah, I mean, actually, this SKB 3 ministry is considered as a collective leave. Yeah, So I mean, actually, this SKB is actually for the government official, but however, the private entities can also adopt this, and this is back again into depends on the employment agreement or the company regulation whether it will be deducted from the 12 days annual leave or probably addition as a paid leave as a bonus for the employees. I mean, that depends on the agreement or the company regulation. Thank you.
And sorry, just as an extra add-on, of course, the alternative option is the company doesn't close. If you're a private company, then you don't have to close. Of course, things like banks, for example, effectively bank, stock exchange, they're all linked to the banking system and so on. So they end up by, to a large extent, following the government rules because half of their operations or the majority of their operations can't function if the banking system's not running. But a private company does not even have to follow collective leave. So, and it's, yeah, that's the key point. You don't have to follow it. You have to have, if you want to make your staff take leave, then that has to be built in, as Oki said, built into your agreements. You can't just say, well, you've got to take leave, because unless that's in your agreement, you can't force someone to take annual leave.
Thank you, Oki and Pak Nick. The next question is from Pak Ricky Albani. Is there any formula update related to the termination will pay refer to service period?
Okay, thank you, Pak Ricky from Albany. So I mean, currently the formula for the severance pay and also the service period has not been any updated yet. Still refers to the old law. So I mean, probably we are not aware whether it will be changed, but however, right now is still the same with the previous law. Thank you.
Thank you, Oki. The next question is from Jeff Wilson, Synergy Downstream Solution. He got two queries. The first one is, when a rep office is closed down, is there any form of audit conducted by authorities as part of the office closure process? And the second query is it allowed that the employment contract for chief representative of a rep office states working days are 3 days per week and not 5 days per week? Maybe okay. Jefri.
I think I can answer for the first question. Yeah, from a licensing perspective, the application to close the rep office should be submitted to BKPM, and then the BKPM will check the taxpayer compliance status. I think Nick has explained in his presentation before that the KSWP is linked to the corporate tax return. If you haven't submitted the corporate tax return, then this will prevent to obtain the approval to cancel the KP3A license. Maybe Nick and Oki can add me if there is anything from the tax audit perspective.
Yes, thanks, Jeffrey. So of course there will be a tax audit. I mean, there doesn't have to be, but there will be a tax audit. And so, of course, ordinarily that expands the time to close the rep office because that tax audit could take up to 12 months. I mean, technically, for a close of an MPWP, it could go longer because the 12-month period is from completion of data. So if the tax office doesn't think you've got data, you can start marching the time on. So you will face a tax audit. Now, as you may know, Indonesia's statute of limitation, general statute of limitation for tax audits is for 5 years. So in theory, the tax office could audit up to 5 years. In practice, they will look at the last full year plus possibly the current year, and that's it. It's pretty rare that they look at more years than that. But that process will run about 12 months, plus you'll have the administrative side of closing licenses and so on. So you could end up with 12 to 18 months from start until you no longer have a tax ID, you no longer have a rep office in Indonesia. But in terms of OSS, they just, for them it's about box ticking. Give us the form, tick, done. OSS does not audit you, for example. They don't care what you've done, frankly, unless someone tells them.
And then for the second queries,
I think from the queries from Pak Jeff, yeah, whether the 3 days per week can be applied. So I mean, yeah, this is dependent on the characteristic of the job for the chief rep, yeah, whether it is requiring attendance for less than 5 days per week or more. Yeah, but however, it is coming back again into the characteristic of the work, and then also suggest that it should be clearly mentioned on the employment agreement between the both party, that this work day for the related position is less than normal 5 days per week. Yeah. So I think, thank you, Pak Jeff.
thank you. The next question is from Kakda. What is the maximum period for a rep office? What happens after the maximum period? Maybe Jeffrey can help.
Okay, thank you. Actually, this is already raised. This is already answered by Hiskia. Hiskia is one of our team also. If the period of appointment chief rep is due, then we need to have a renewal of appointment letter. I think I have mentioned before in my slide how to ensure the rep office is still in operation is by proving that the appointment of the chief rep is still valid. This is why you need to ensure that the validity period will not be expired soon. Thank you.
The next question is from Pak Fauzan, LSS. Can we sign pro forma invoice or sales contract on behalf of head office for the sales transaction that we made? I think Jeffrey or Panik.
Yes, thank you, Azrit. I think I can answer this question, Pak Fauzan. Absolutely not. You cannot sign contract on behalf of the head office. You can only coordinate and also get in touch with the local distributor or local customer. But if you are as a rep office, then you are not allowed to conduct these activities. Thank you.
And just as an add-on to that, of course, if you do it anyway, well, then you've just guaranteed yourself, well, if the tax office becomes aware, you've guaranteed yourself a corporate income tax exposure because you've moved into selling instead of just marketing. So you've got a breach. A lot of people would say, who cares if there's a breach because the OSS doesn't monitor. So it's certainly, it leaves you with exposure for corporate income tax. And if you've got group legal expecting you to be compliant, of course, you haven't been compliant with your license.
Thank you, Jeffrey and Panik. The next question is from Rachel of Singapore Management University. For costs paid by head office for the rep office, what if the bill is raised directly to the head office in the home country?
Okay, that's probably addressed to me. This obviously links to those comments we're making about withholding tax and potential offshore VAT, and so that it comes down to what are those costs that you're talking about. You shouldn't be raising a bill. First of all, if head office pays the rent in Indonesia for the rep office, you don't actually, I wouldn't say bill it, you're just reimbursing it because it's the rep office's cost paid by the head office. And so, you know, if you want to call that a bill, fine, but we wouldn't call it an invoice. It's no one's income, if you like. It's just a payment on behalf of someone, so it's a recharge. You don't add anything to it. Frankly, we've seen this with a couple of one client where they said, oh, but we have to have an intercompany service agreement. I said, no, you don't. This is your head office and your division in Indonesia, your marketing division. So all you are doing is paying on behalf of, and you just have an internal journal and you move the cost across. So in terms of other costs, you need to look at what those costs are. If it was, say, head office allocation of time, why would you want to allocate that to Indonesia? Because unless Indonesia, the rep office, is reporting income and expenses, you don't need the cost in Indonesia. So you just wouldn't allocate those head office expenses, for example. So you really got to look at the nature of the costs. Maybe for your management accounting, you really want to allocate between what's happening in, say, Singapore, what's happening in Indonesia. If you want to do that, do it, but have 3 levels. What's really in Indonesia needs to be in Indonesia. What's part of your management accounting, and that's effectively outside Indonesia, and what's happening outside Indonesia, full stop. So that would be my suggestion there, Rachel. Look carefully at what it is, because you don't want to create problems just because of accounting allocation when it is just a division after all. It's not a separate legal entity. I hope that addresses that question. Thanks, Rachel.
Thank you, Pak Nick. The next question is from Suvan of Kunik and Bauer Sea. Is it mandatory to have a bank account for rep office, or is it okay to continue operating without one? I think it's Jefri or Pak Nick.
Let me jump in if you like. There's nothing in any regulation that says you've got to have a bank account, but there are practical issues. To pay your tax, you need a bank account in Indonesia to pay tax in Indonesia. But that doesn't mean you have to have that bank account. You know, we, for example, organizations can provide a bank account for you. Salaries, well, you can transfer the salary from overseas. Tax is still due in Indonesia because it's for an employee of the rep office. So keep that in mind. It doesn't change the tax obligation, but you can do that if you wish. You've just got to work out how to deal with the foreign exchange issues with rupiah and so on. But we do have clients that don't have a bank account here because, of course, day to day or month to month, all that happens is they get a bunch of funds, they pay payroll, they pay the tax, pay BPJS, and some sundry expenses, and the bank account drops to 0. And they just think, oh, we don't want to have a bank account in Indonesia, waste of time. So you don't have to have one. There's practical reasons it's useful, but you'll certainly need someone to have a bank account to allow you to pay tax, whether it's an employee or an organization. Personally, I would recommend not having an employee receiving the funding from the group to pay all the rep office costs, because then you face this risk that the tax office might one day look at the employee and say, oh, that's all his income. Now, of course, he might say, oh, no, this is salary of, you know, my colleagues, and this is office rent, blah, blah, blah. Tax office might choose to not understand that. So I wouldn't recommend funding an employee instead of opening a bank account. Either use a professional service firm to do it or open your own bank account. But short answer, not mandatory, but practical reasons why you should have something.
Thank you, Pak Nick. The next question is from Feryandi. There's 2 questions. Question to Pak Jefri. Does the rep office allowed to do after sales activities such as technical service, passing quotation and invoice, even though those documents comes from HQ? And the second one is for Pak Oki. Regarding employment regulation as RO, do we follow Indonesian Depnaker regulation or we follow our HQ regulation? Please elaborate how far we have to follow Indonesia Depnaker regulation and HQ regulation. And the other one is regarding with the new regulation from government so-called omnibus law. Does any changes in terms of labor welfare or responsibility or even thought company responsibility?
Okay, thank you. I think I will answer for the after sales activities. From my understanding, the after sales activity should be done by the Indonesian entity. Your local distributor should done this activity. If the rep office considered doing after sales, then it considered as doing the trading itself. So I believe you are not allowed to do the after sales activity. For passing the quotation and invoice, I think it's quite simple. You can do that because it's only giving or communicating with your local customer, communicating from the head office to your local customer. I hope that my question my answer address your question, Bu Cindy. Thank you.
Okay, I will answer regarding the employment regulation. How far we have to follow Indonesian Depnaker regulation or the HQ regulation. So I mean, this is coming back again into the regulation. Please note that the Depnaker regulation is the minimum regulation that should be followed by the rep office. So let's say, however, if the company is following the HQ regulation, which is providing more better benefits for the employees, so this is still acceptable. And then for the regarding to the new regulation from government on the omnibus law, does any changes in terms of labor welfare or responsibility or for the company responsibility? So I mean, right now, this is please note that the government regulation is a minimum regulation, but however, if there is some any other benefits can be provided by the rep office better than the minimum responsibility from the employer, then it is still acceptable. And then I mean, for the responsibility for the welfare, so I think coming back again that if this can be provided better than the minimum, so I mean, it is the company decision for this. So thank you, Bu Cindy.
Thank you. The next question is from Kimberly Wijaya of ByteDance. I have a question on KP3A CIT responsibility. If the KP3A RO isn't allowed to perform any sales of goods and or services, while the CIT reporting is required, does it mean that the RO will only be reporting a nil CTR?
That's right, Kimberly. As I mentioned in the presentation, it becomes a report rather than a return of income, if you like. So you still have to show a balance sheet and a profit and loss, but if there's no income, then it'll just be an expense report or a loss report, if you like. And of course, depending on whether you have also accepted that or there is a liability for Article 15 tax, then that will also be reported in that return. But if, for example, you're not even a marketing rep office, you're say a sourcing rep office or a KPPA, then in fact it will really just be a nil return, showing the expenses and any balance sheet items, and that's it.
Thank you, Panik. Consider that now it's already 12 past 10. Maybe we can have one more queries from Tessa Sonia. How KP3A PMSE is different from ordinary KP3A from tax perspective?
Thanks for that question, Tessa. I think that's outside the scope of what we're trying to cover in this webinar. We're happy to take that up with you directly because I know I think Kimberly's also asked a similar type of question as well. But we need to discuss those with you separately because the KP3A PMSE is a special circumstance where foreign e-commerce businesses are required to register something in Indonesia so that the authority has someone to complain to if there's problems with the services or the goods being provided. But best if we discuss that separately. Thanks. Just maybe, sorry, one question we haven't specifically addressed was questions about whose manpower regulations does a rep office need to comply with? The answer is Indonesia's, because the rep office is an Indonesian employer. So it needs to comply with Indonesia's. And so, for example, rules on minimum annual leave, sick leave, these need to follow Indonesia's regulations. THR that's a mandatory thing. That's not something you can elect to pay. And so if overseas they don't have THR, well, that's the deal for operating in Indonesia. BPJS, there's an obligation to do that. Even if overseas, maybe you don't need to pay that. You can pay it out to the employee. In Indonesia, you need to comply. So the short answer is you need to comply with Indonesia's regulations. How you can overlay the foreign regulations, if you must, depends. But if you like, the minimum requirement is Indonesia's regulations. If overseas they give more benefits, no problem. But you can't take away the benefits provided or the protections provided by Indonesia's manpower law for Indonesian employees.
Thank you. Ladies and gentlemen, finally we come to the end part of our webinar. Hopefully this presentation will be beneficial for everyone. We apologize for any inconvenience caused during this webinar session. Don't forget to fill in the feedback link that already shared in the chat room. The PPT slide will be accessible to download after the participant has completed the feedback form. Thank you for joining and see you again in our next RSM webinar series. Stay healthy and good day. Thank you.
Thanks everyone. Bye-bye.
Thanks, everyone.
At RSM, we have over 40,000 great minds that take the time to find out what makes you and your business tick. Our audit, tax, and consulting services are designed to help you move forward with confidence, but it's how we do it that sets us apart. RSM's experts take time to understand what matters most to you, which means you receive advice that goes beyond your expectations. What you'll notice is the lengths our people go to understand the hurdles that stand in your way, and then to find innovative ways to help you jump over them. That's the value of RSM. That's the power of being understood.